Hello. Good morning, everyone. Welcome to this week's morning research call. We're approaching holiday season, so that's why a lot of my colleagues are not around. But that's okay. If you have any question regarding to any of the stock that they do cover, feel free to leave the question in the Q&A sector, and we're gonna get back to you after the session. Okay. Without further ado, I guess we'll start. So we'll start with the semiconductor quarterly. So John is on leave, so I'll be presenting on his behalf. So semiconductor industry has been through quite a bit, but after the third quarter, it does look to have bottomed. So we actually have a pretty optimistic outlook. As per usual, we have divided the industry into 4 different sectors, namely the processor, memory, equipment, and foundry. Looking at the processors, CPU sales have been recovering, as well as the channel inventory, it has been normalizing. So both Intel and AMD, they both beat their revenue expectations. The near-term CPU growth is led by first, the Windows 10 end of service, and second, higher compute power to support increasingly complicated applications. There's also a very strong AI-related demand that's been driving the data center GPU higher. NVIDIA has been seeing a revenue that's 3 times year on year, and they have guided for growth to accelerate in the fourth quarter. Customers are continuing to invest heavily to power accelerated computing, so everything is on the positive side. Moving on to memory, all the 3 companies that we have selected for the sector have seen sequential increase in the revenue. Their year-on-year contraction have also been eased. Because of the production cut and the higher demand, the inventory levels has also been reduced significantly. So we have expected the memory prices to have already bottomed. The turnaround is going to be driven heavily by the increased AI-related demand. In fact, for Micron, they have been guided revenue growth, which is the first time in the 18 months. Moving on to equipment, so compared to processor and memory, equipment we believe is still in a down cycle with very low utilization rate. This is because the customers are still very cautious in investing and the market is still very weak. So only ASML has grown 25% year on year, and this is because they have a order backlog of more than 35 billion euro. The interesting thing about equipment is if you do listen to their quarterly release, all the 3 companies actually have very positive outlook. But if you do take a look at their revenue guidance, it's still pointing to further slowdown. So we believe that equipment is also at the end of the tunnel, but not so quiet compared to processors and memory. Moving on to foundry, TSMC revenue has seen a 15% decrease year on year because the demand still remains quite muted. They have also guided for the revenue to decline further, another 4% in the next quarter. This is because China recovery is still very low, and the AI-related demand is limited by the supply. One thing to note is we do have a driver of growth, which is the high-performance computing chip. This is essential for the edge device incorporating AI functionality. So this, we believe, will drive future growth for foundry sector. That's all from me. Now I'll pass my time to my colleague, Ambrish.
Thank you, Helena, and good morning, everyone. So this morning we released a report on Salesforce third quarter results. Next slide, please. Overall, the revenue, it came in line with the expectations, whereas earnings, the bottom line, it went ahead mainly because of higher operating leverage. So in terms of overall performance for the 9 months ended 2024, revenue and PATMI was at 74% and 78% of our full year forecasts. So jumping on to the positives, in the third quarter, the Salesforce third quarter total revenue, it grew by about 11% year over year. And this was mainly because there was a robust demand across its products. For instance, the core products, which are Sales Cloud and Service Cloud, these pair products, they basically help companies to handle their sales operations and provide better customer service. So the revenue for these 2 products, they grew by about 11% and 12% year over year. Whereas the data segment, it was the fastest growing segment. It grew by about 22%, and this was mainly because there was a continued strong demand for its integration software, which was MuleSoft. And secondly, the current remaining performance obligations, the CRPO, it's basically a key metric for software companies, as it basically highlights the future revenues that have been already contracted, but they would be recognized as sales in the next 12 months. So this metric, it grew by about 14% year over year to about 23.9 billion, and it was higher as compared to the company's guidance of about 10%. And management highlighted that this was mainly because of strong early renewals and large customer wins. For instance, the management highlighted that the number of deals with a value of over 1 million, it surged by about 80% year over year this quarter. And lastly, the company Salesforce, it has been focusing on improving its profitability, and as a result, its operating expenses for third quarter, they dropped by about 4% year over year. And this resulted in operating margin of about 17% as compared to 6% in the year ago period. And this was mainly because of continued cost cutting measures. Like the company highlighted that its headcount was down 11% year over year. In terms of outlook for the fourth quarter, management expects revenue to grow by about 10% year over year to 9.2 billion US dollars. And this would be again led by the core products like Sales Cloud, Service Cloud, and strength in its MuleSoft product. And however, management highlighted that the recent price hike should not have a material impact on its top line at the moment, as it would hit the customer base at the end of 2 or 3 years. So that's wherein the full effects of pricing will show up on the top line. As compared to its bottom line, it would continue to focus on profitability, and as a result, it expects its GAAP earnings per share to be about $1.27 as compared to a net loss of 10 cents. And also, Salesforce, it has integrated AI across its product base through its AI tool, which it's named as Einstein GPT. So this basically helps companies to generate personalized emails, or also summarize voice or video calls, summarize notes from the voice or video calls. And management highlighted that it's witnessing early traction for its AI related services, and it highlighted that about 17% of Fortune 100 companies, they are right now its customers. They have subscribed to these AI services. And in terms of valuations, we have raised our target price to 270 from the previous $242, and this was mainly because our revenue estimates have not we have not changed our revenue estimates, but we have increased our PATMI by about 14% year over year, and mainly to reflect lower expenses. And overall for Salesforce, we have accumulated recommendation, and we believe that it's well positioned mainly because of its continued multi-cloud momentum strategy, and through the digital transformation trends, and wherein through its customer 360 platform, wherein the customers, they get a holistic view of their customer data across the various segments. So that's all for me. I would now like to pass it on to Darren.
Thanks, Ambrish. So City Development released their operational updates for the third quarter. No financials were provided. There was also no briefing, so it's just based on the document that was provided. And so for their third quarter operational updates, the residential market in Singapore remains resilient despite the cooling measures announced earlier this year. So 183 units were sold with a total value of 325 million. So this is improvement from last year, which was 95 million and 281 million in total sales value. This was driven by mainly the launch of the Mist, which is currently 41% sold to date. It was sold at an ASP, or average selling price, of about $2,065 per square foot. So looking ahead, they're looking to launch Newport Residences, which was supposed to launch last year, but because of the cooling measures, it was pushed back. So they're looking to launch Newport Residences in the first half of 2024, and also the 512 unit Lumina Grand EC that is along Bukit Batok West Avenue 5 is expected to launch in first half 24. Excuse me. Excuse me. Yeah, so during the quarter, they also secured a 155K square foot residential government land sale site at Champions Way for 295 million or 904 per square foot, $904 per square foot in September. And this beat 5 other competitors, and this project is slated for launch in second half of 2024. It will comprise of about 350 units. So next, the hospitality segments continues to improve. The RevPAR 9-month increased 31%, and we expect this to continue growing at a bit at a slower pace going forward from the higher base from the recovery of travel. And during the quarter, they also acquired a hotel in Seoul for 144 million and a hotel in Osaka for 78 million. And this shows that trying to expand their hotel portfolio. And next, they are expanding the living sector as well. So this living sector encompasses two main items. One is a private rented sector, the PRS, and the other one is a PBSA. So under the private rented sector, the portfolio, they acquired 25 freehold assets with 833 units in Tokyo for 322 million in September 23. And right now, after this acquisition, they own 35 operational PRS private or private rented sector assets in Japan with an occupancy of above 95%. And the last thing during this update was that they are buying back shares to strengthen their capital structure. So this is preference shares. So just the announcement was that they were announcing to buy back shares, but after that it is really complete. So they have bought back 10% of the preference shares through an off-market equal access scheme for 78 cents per share in cash. And after that, they also cancelled these preference shares that they bought back, and this will reduce the finance cost in relation to the coupon payment of the shares, so as strengthen their capital structure. Yeah, so for the outlook, in the third quarter, they commenced an AI for City Square Mall, which should add about 26,000 NLA to the mall via a community or sports facility scheme and through decanting of mechanical and electrical facilities. So this is expected to be fully completed in 2025, and the mall remains operational now. Yeah, so that we maintain our buy with an unchanged target price of $8.22, and it's a 45% discount to our RNAV. Yeah. So for next is Manulife US REIT. This is Phillip on the ground. So as you all may know, Manulife US REIT, they came out with a recapitalization plan last week. So I'll just run through the details of this recap plan. Yeah, so for this recapitalization, the first part of this recapitalization plan is to pay off the about $285 million worth of funding. So in order to pay off this 285 million, they are proposing three things. So one of it is divestment of Park Place to sponsor at 98.7 million. Another one is about 137 million US sponsor lender loan and an effective interest rate of 10%. So this is actually a 7.25% interest rate, but it has an exit premium of about 21%. So all in all, it's about 10%. And as well as the utilization of 50 million of cash on Manulife's own balance sheet. So all of these three factors will add up to about 285 million. So they are looking to pay off 285 million of this in debt. And if you're wondering why the interest rate is so high at 10%, it's because there's a liquidity crunch in the US for US commercial assets or properties. The banks are not lending at all to any of the US commercial properties. So if you look at the chart on the right, the independent financial advisors, they came out and mentioned that effective interest rate of 10%, it falls reasonably within the comparable debt instruments that Manulife could have gotten if we look into alternative debt sources. So you look at it, the US corporate debt yield index, 7% to about 15% per annum. And non-investment grade secured bonds is also trading at about 17%. So this is still above the 10%, and other publicly sourced unsecured debt comparables, senior loans, are also around 10%. So the take is that this 10%, it falls reasonably within comparable debt instruments. And so this 285 million is the first step. And then the next step for them is to reinforce a position. So they're trying to get this disposition mandate to raise a minimum of 330 million. So this disposition mandate includes disposing some of the assets in different tranches. I'll get to it in the next slide. But the next part of it is of this reinforcement strategy is that the half yearly distributions will be halted until 31st December 2025, and it may resume earlier if certain conditions are met. So these early conditions are basically the fact that the total liabilities to total deposited properties is no more than 45%, or if it's more than 45% but less than 50%, the ICR is 2.5 times, and there are no potential events of default continuing for at least one financial quarter. So these three are the early conditions. And in exchange for this recapitalization plan, so Manulife, what they'll get is they'll get the waiver of past and existing breaches. So this is a waiver of all past and existing breaches. So this includes the interest rate cross default of the interest rate swaps as well as financial covenants. And they also get a temporary relaxation of financial covenants till 31st December 25. So right now, they're under their financial covenants. The first breach that took place was because their unencumbered gearing, it breached 60%. But right now, they have a temporary relaxation from 60% to 80%. And the bank interest coverage ratio also has been relaxed from 2 times to 1.5 times. And as a result of this recapitalization plan, all loan maturities of existing facilities are extended by 1 year. The management has 19 months to execute the asset dispositions. So if you recall earlier this year, because of the breach, all of their loans were classified as current in their balance sheet. But if this recapitalization plan goes through, then their debt will be extended by 1 year. So they'll have a weighted average debt maturity of 2.7 years instead. So because they are not going to pay, rather than halting their distributions until 2025, Manulife might incur some withholding tax from the non-distribution from the non-distribution, basically. So they might incur tax of up to 43% if all unit holders fail to supply the valid tax forms, which is basically the W8N form. So if all unit holders, they fail to supply this W8N form, Manulife will have 43% tax on the non-distribution. But if let's say 10% they do not do so, they'll have Manulife will incur a withholding tax of 4.3%, and it goes down from there. So historically, in their books, only about 1.5% of them of all unit holders does not or rather did not supply the valid tax forms. So this will be about less than 1 million in tax for every 100 million on non-distribution. So basically the number will be under 1%. Yep. And pro forma of this recapitalization plan, 30 June 23 numbers, after the proposed divestment, sponsor, lender loan, and tranche 1 asset dispositions, the gearing will be as such. So after the proposed divestment, the gearing will be 54%. After the proposed divestment, as well as the sponsor lender loan, the pro forma gearing will drop to 52%, 52.8%, and if you count all three after the proposed divestment, as well as the sponsor lender loan and the tranche 1 asset dispositions, which is the 328 million, the gearing will fall to 49.4%. Yeah, and the NAV, the numbers at the bottom are we see the same way, like 0.4% after proposed investment, after sponsor lender loan, and 0.34 if you count all three together. Yeah, so next slide, please. Yeah, so a bit more on the disposition mandate. The rationale for doing so is because they want to reduce the admin time required, and they want to proceed on with the asset dispositions without the need for any EGM. But of course, there are certain terms that are the minimum terms for or rather the process for it to be done. So the assets will not be sold at less than 90% of the independent valuations obtained. Yeah, so you can look at the right side that Manulife, they have classified the assets into 3 different tranches. So the tranche 1 assets are the assets that they are the ones that are looking the most to divest, as they deem that these assets are the riskiest. They have highest occupancy risk. They have the highest capex requirements to maintain their competitiveness, and the total return potential is lower. So they are looking to divest these 4 assets, and they include the Centerpoint, Diablo, Figueroa, Penn. So these assets are in Washington, DC or downtown LA, where the markets are weaker. And for Manulife, their stronger assets are Phipps and Michelson. So these assets, they have a lower occupancy risk, higher capex requirements, and their total return potential is higher. So these are not on top of the list for the tranche 3. So they're looking at divesting more of the tranche 1 assets, and these 4 assets combined are the 328 million that they have put in the numbers. Yeah, next slide, please. So for the dates that investors will need to take note of. So the announcement date was 29 November, that was last week, and the EGM is on 14 December. So our house view is for investors to basically vote in favor of all 3 resolutions, where all 3 of these resolutions are interconditional. So the proposed divestment of Park Place, as well as the sponsor lender loan and a disposition mandate. So if any one of these does not pass, then you'll see it as outcome 2, where unit holders do not approve any one of the resolutions, then the existing facilities will remain in a breach. Basically, the lenders have the right to accelerate the payment of all of the loans that are outstanding immediately. And as a result, it might be likely that Manulife might need to liquidate their portfolio at distressed prices. And ultimately, the equity fund raisers might not, the equity owner unit holders might not be able to get back much capital, as if they are sold at such distressed prices, right? After paying off all the lenders and such, the equity holders might not get much. So that is quite an unfavorable outcome for us. So we suggest that equity unit holders vote in favor of the resolutions, where after the approval of all these 3 resolutions, the lenders will grant a waiver and relax the financial covenants of existing facilities, and the manager can start executing this recapitalization plan. So just one more thing to note is that the approval, or rather the threshold for it to pass, is 50%, 50% for all 3 resolutions. Yep. Yeah, so that's all for me for Manulife. I'll hand over time to Zane. Thanks.
Thanks, Darren. Move on to the technicals. Next slide, please. So for S&P 500 last week, we saw a new year high closing level for this year. So with that shows the bullish momentum is still good. So with that, could still reach higher levels, with the immediate resistance at 4,580 to about 4,640, with 4,640 being the swing high in March of last year. As for the current support, is likely to be at 4,500 to about 4,540 area. Next slide. So we had a report on to look at Asia Pacific's assets. So this report actually focused on the lost decade for some of the underperforming assets in Asia Pacific. Yeah. So when we look at overall, the outperformers have been China, Japan, India, as well as Taiwan. So when we look at the returns in terms of USD terms, India has been the best of the pack, gaining over 122%. Yeah. Then Japan has also performed well, over 40% gains. Taiwan over 70%, and China about 20% or so. In North Asia, when we look at the underperformers over the past 10 years, it will be South Korea as well as Hong Kong, with the Kospi down about 11%, and the Hang Seng Index is down about 26%. Then overall, in the indices in Southeast Asia also perform quite poorly. when you look at our own STI, it fell about 13% over the past decade. And the worst performer was actually Malaysia's KLCI, which actually was down about 40 to about close to 50%. So this just actually just looks at how the different indices actually perform over these past 10 years. Next slide. Then we also had a report on technical monthly for November. So most of the asset classes actually were in the green in November. The standout was S&P 500. We had a very strong rally in the US market. And US Treasury bonds also recovered, gaining about close 4.5%. Gold also did well. Bitcoin also continued to do well as well. The rate was oil, which was down almost about 5%, and Singapore as well as Hong Kong equities were about close to flat. Yeah. So in terms of the outlook for December wise, we think that there could be a bullish year end for most of the assets, given that they are currently S&P 500 US Treasury bonds, gold as well as Bitcoin currently in an uptrend. So it's likely that they will continue this uptrend going to the year end. As for oil, it's likely for price to continue a bit of a consolidation, given a bit of a weak momentum. As for Singapore equities and Hong Kong equities, could remain sluggish in this month with the weak momentum. Next slide. So this is the chart for S&P 500 ETF VOO. So when you look at the chart, what happened in November was it actually recovered back into this main uptrend channel, also breaking above the downtrend channel. So very strong bullish momentum. In terms of MEC, we also saw a bullish crossover as well. So with that, we could still see it try to retest the all-time high, possibly around the $429 if we continue this bullish momentum. Next slide. Then for the Treasury Bond ETF, IEF, we saw a breakout of the downtrend channel in November with a bullish crossover on MECD as well. So I think in the short term wise, the momentum is actually going upwards. You should see price try to go to hit about $95 to $96 before we see some sort of consolidation might take place. Next slide. Okay, then in terms of gold, we look at this GLDM ETF, Spider Gold Mini Shares Trust. It's been shaping up pretty well. You see that it has been retesting the $41 level again. And actually, yeah, I think this morning gold also went up quite a bit, crossing the new high level. So very strong bullish momentum for gold. I think in December gold could still perform well. Next slide. Then for the chart for oil, go back one slide, please. Yeah, and for the oil and gas exploration production ETF XOP, which actually tracks the oil market, we saw that it was largely flat. It's still continuing a bit of sideways consolidation. So I think with the current declining momentum we see in the indicators, I think oil performance will be a bit muted going to December. Yeah, for now. Next slide. Then for the Bitcoin strategy ETF, BITO, Bitcoin has been performing well. So since breaking out of the 1630 horizontal resistance, it's been November has been going up a bit and consolidating in the process. So with that, we could still see it trying to go to higher levels to about $20 and above for this ETF with the strong momentum currently for Bitcoin. Next slide. Then for Singapore equities, after we saw a breakdown of the rising wedge earlier in October, price has been suppressed under the downtrend resistance line. So with the current weak momentum as well, we could still see a bit of a sluggish performance for the Singapore equities ETF to try and maybe retest the recent swing low around the 310 level. Next slide. And last but not least, for the Hong Kong equities, it has been continuing to sideways in a bit of a range pattern ever since breaking down of an uptrend support line back in August this year. So it's been lacking momentum since. With that, we could still see this ETF sort of underperform in December with the current week momentum. Next slide. Then we also had a report on the ISDRs monthly for November. So in November, it was quite all three SDRs were in the red, which were Airports of Thailand, CPO, and also PT Exploration and Production. Airports of Thailand was the biggest mover, down about over 10%. Then in terms of their current trend wise, they are all in downtrends. And in December, we expect a sluggish end to the year for most of them with the current bearish momentum, with an exception possibly for CPO, where the price could see some consolidation as it should hold the recent 52 baht key support level. But upside is likely to be limited with a strong resistance at the 57 baht level. Next slide. So this is a chart for Airports of Thailand. You can see that ever since the breakdown of the rising wedge, the downtrend momentum has been very strong, especially in November, where we saw it those two very strong bearish candles with very high volume as well. So with such a strong bearish momentum in this stock currently, I think for December we could still see possible downside if it continues to go downwards to try and test the support closer to about $55 to $56. Next slide. Then for CPO, you can see that it extended the decline in November. We actually tested the key support at 52, but we actually sort of had a small rebound at the end of the month. So with that, we should hold a bit of these lows, but you can see a bit of a sideways trading going into November. Next slide. And as for PDT, has been lacking momentum as well. So since it peaked about in September to about October over there, price actually pulled back and actually broke the key support at the 160 baht level. Also, we are breaking below this key uptrend support line, which has helped price since 2020. So with that, with the lack of momentum and a fresh bearish crossover in MACD, I think there could still be some downside coming in for PDT in December. Next slide. So for individual counters, we have Yangtze Shipbuilding. For this is a technical buy at 147 with take profit levels at 156 as well as 165, with a stop loss at 143. The stop loss goes at 145 on Friday. So for Yangtze, the chart wise, it looks like it's coming out of this downtrend resistance line after forming a higher low previously back in middle of November. So I think the downtrend which started in September, stretching to November, has sort of abated, and we could see some recovery in terms of the price. MACD and RSI also pointing upwards with increasing momentum as well. So we could go on to hit these two resistance levels, which are the recent swing high in November as well as October. Next slide. So this is just a summary of the trade initiated. Currently is about down 1.3 currently as of Friday, 1.3%. So that's all for me now. I'll pass on the time to Peggy to talk about Zixin Group visit note. Thanks.
Thank you, Zane. Morning, everyone. We visited Zixin's Fujian plant late October. So these are some of the observations we had after the visit. Just to recap, Zixin is produces sweet potato focus sweet potatoes. It's a sweet potatoes producer for snack food as well as for the downstream businesses. They had a very integrated value chain all the way from planting the seedling cultivation to supplying fresh supply, produce the snack food under their own brands as well as third-party brands, and make the sweet potatoes are also produced made into functional foods such as starch and animal feed. The production base is all in Langcheng County in the Fujian province. China is the largest sweet potato producer in the world, but the production has been coming down like 3% per annum over the last 10 years. The biggest because province that produce sweet potatoes is actually in Sichuan. So Fujian is a relatively smaller producer compared to Sichuan. We think Zixin will be well plugged into the China's quest for food security. Premier Xi Jinping has many times emphasized that food security as a priority. With that, the local authority is actually supporting the industry through allocating land, constructing some premises, and offering favorable lease terms for cold storage, warehouse, and plants for the production of animal feed. We'll see some pictures later in the slides. The cold storage facilities are important for this, especially for Zixin, because they will extend the shelf life of the products. Currently, there's only one harvest of sweet potato every year from late August, early September, all the way to early November. So with the cold storage facilities, they are able to extend the shelf life and sell. The sales can take place even during the lull periods in where the harvest does not take place. So Zixin is going to take advantage of these warehousing facilities that the local authority has provided. It is also diversifying downstreams into convert bio waste, such as discarded peels and fines into animal feed. These are ingredients for animal feed, and the fits into the longer term Chinese strategy to become to produce more of their food domestically, especially as sweet potatoes are able to be a replacement, not totally, but it's a replacement for soybean meal. So the Zixin has also been invited to participate in rural revitalization projects in other provinces such as Henan and Hainan. The exciting part about this thing is that one of the partners in this project is CITIC, which is state-owned. So it just have a stamp of confidence on their working model. But the earnings of Zixin has so far been quite choppy. Also lately because of the COVID that happened over the last 2-3 years. In FY23, the revenue at 219 million RMB is already only about half of what they achieved in FY15-16. But and the price the share is trading at 0.3 times price to book. It had a net cash of 102 million at the end of September. This net cash has been falling. It's because they had some how they work is such that they sign a supply contracts with 5 cooperatives. These cooperatives are a group of farm. They are the one that group the farmers together. So Zixin has signed long 15-year supplies contract for these cooperatives to supply them their sweet potato. In return, Zixin will pay them in advance payment every 5 years in advance. So they just paid a 50 million advance payment in first half 24, and as these contracts were signed in 18 and 19, so we can see that the next 5 years cycle is going to start over again from 2024 onwards. So there's something to note about the Zixin. And let's look at some pictures. Yeah, thanks. So this Zixin has embarked on this planting of the seedling. Then they plant this seedling on land that has been leased from farmers for 15 years. After planting them for 3 months, they will send this to the farmers, the young plants to the customer farmers, who will cultivate and harvest the sweet potato in September. Then the sweet potato will then sold back to Zixin at the discount to the market price. They did not tell us what is that discount, so we're not able to gauge what is the advantage in terms of price. But the reason why they're doing this is to make sure that they get the type of potatoes that they need, sweet potatoes that they need, and the quality as well as a certain quantity that they require, at least the base quantity. For those quantity that there's not enough, they will source from external other farmers outside these 5 cooperatives. The next slide, please. So Zixin, besides selling the sweet potatoes fresh as fresh products to the supermarkets and to the markets, they also further process these sweet potatoes into snack food. And this is the picture on the left. These snack foods are sold under their own in-house brands such as Su Gong Fang, Zi Lao Hu, Le Di. These are their own brands. They also sell under third-party brands. They also OEM for third-party brands. And these third-party brands are, the markets are mainly in the bigger cities, like the tier 1 cities like Beijing and Shanghai, where Zixin does not have a presence as yet. Okay, next slide, please. So these are the warehouses and the fermentation plant on the land that has been granted to them by the government. So these facilities have been already constructed. So they are ready to move in to the equipment for Zixin to move in the equipment for cold storage as well as for fertilization, fermentation, so that they can convert the bio waste into feed, animal feed that can be sold further. So there's advantage here is that they need not spend money on like disposing the waste, and then they also are able to generate a new stream of income from the animal feed. So that's all for Zixin. Move on to the next. Yeah, thanks. I'll talk about Keppel Corp today. Keppel last week announced acquisition of Airmont Capital. We look at some of the details in the next slide. Yes, yeah, thanks. So this table is briefly a description of the transaction. Keppel will buy this fund management company. It's a European-based fund management company that's managing 24 billion Sing dollars worth of assets. It will buy the company in 2 tranches and take a 50% stake by the first half of 2024 for a value of 517 million Sing dollar. And the second tranche of the remaining 50% will be acquired in 2028 for a higher price of 834 million. We believe this is there are some conditions for Airmont to meet and some targets. So therefore, which explains the higher valuation for that Keppel is paying for the second tranche. So for the first tranche, after the acquisition, Keppel expects the recurring income to grow by 9 million Sing dollars. So the total value that Keppel is paying is 1.35 billion Sing dollars. That's the amount to a goodwill about 1.27 billion. You might wonder the valuation that Keppel has paid to price Airmont Capital is 13 times EV/EBITDA. This is very Keppel did not elaborate on what's the EBITDA number, and of course we don't know the EV as well. And it's typically for fund management company we use a PE valuation. So this also looks quite out of the norm, but the industry-wide, the EV/EBITDA is about 14 times for fund management company. So this valuation looks reasonable. Now, the other questions we had was that the recurring income of 9 million versus the funds under management of 24 billion looks a bit lopsided. The management explains that this 9 million is really the management fee. All the performance fee so far has been all reinvested in the FUM. So therefore the general partners, the stakes in this FUM is relatively sizable. Again, they don't give us the breakdown of the stake between GP and LP. The impact on Keppel is listed in the table below. So you can tell them the table, the NTA is going to fall because of the goodwill element, that goodwill that they are paying. The other thing is it's not an acquisition for income, because the 9 million recurring to Keppel is just less than 2% of Keppel's profit. So it's nothing to shout about. So the gearing that Keppel, if they pay all in cash, will go up to 0.88 times. That's for the first. If they pay in both half cash and half shares, the gearing will be slightly better at 0.82 times. Keppel highlighted that this share, so-called, it's going to be taken out from treasury shares, so they will not be issuing new shares for this acquisition. And most of the shares will also be distributed, issued only in the second tranche. I think the reason why Keppel the reason for Keppel to buy this M1 is really in these two pie chart here. So M1 has a very strong LP base. It's very well spread across the group. North America investors account for 29%, Asia 34%, Europe 21%, and Middle East 16%. But more importantly, on the pie chart below, the sovereign wealth funds account for 48% of its investor base, pension funds 42%. These are fairly long-term investors. So describe the type of the investments that they are keen to take part in. M1 don't just invest in established real estates. They also is involved in developing properties, and they are also involved in non-traditional assets such as student dormitories or even studios. So it's a very for these reasons, I think Keppel it makes a very attractive acquisition target for Keppel. So we're maintaining our target price for Keppel at $7.52. In the buy recommendation, this 24 billion additional AUM will bring Keppel its AUM fund under management to 77 billion, approaching its target of 100 billion, which it has set for the Keppel Group. Yeah, so that's all for Keppel. Yeah, so I'll cover the Phillip Singapore Weekly this week. Last week we had the OPEC Plus a meeting that has been delayed. So they held a meeting on the 30th of November. So the conclusion is to cut 2.2 billion barrels per day in first quarter 24. This is an additional 0.9 billion from the fourth quarter 23. But the impact is not shown in the oil prices. The oil price fell nonetheless, mainly because this cuts is really voluntary, and it's really very difficult to identify who is going to cut how much. Except for Saudi and Russia, it was quite clear that the rest of the countries, the numbers are quite a bit difficult to tell. And the smaller members of the OPEC Plus have been objecting to their quota. They might not conform to what the cut has promised, because they also have their own national fiscal budget to meet. So the market is doubtful whether this cut the 2.2 million can be followed through. But we still think that oil price would stay around this level for most of 2024, even though we see a slowdown in the US economy for next year. This is also mainly because the higher interest rate has made renewables players more cautious, as the higher price has reduced the availability of credit, and the renewables players are also complaining that tariffs are not not good enough for them to be profitable at this current operating cost. So there will be a slightly slowdown in the build out of renewable projects. So therefore, we think the traditional oil, the conventional energy will still continue to play a part in a bigger part in the supply of energy. In Singapore, we also announced a property tax rebate for owner-occupied residential properties in 2024 to mitigate the higher property tax coming through for next year. And the higher property tax is really because of the increased annual value, and the tax rate has also been revised upwards. So this is this is goes to show that going forward into 2024, we think that the consumption demand might be weakened with the higher GST, as well as the other costs are rising for going forward. Yeah. And in the US, last Friday, the US the Fed chair had made his speech before the blackout for 2 weeks. These are his words. He said it's too early to talk about rate cuts, but he also considered that the progress on inflation is considerable. So he expects the impact of the interest rate increases to continue to put downward pressure on the economy and inflation in the coming months. So we read this from here that the December there's no more rate hike, no more increase in December. And for next year, looking forward to cuts, which we believe will be in the second half. So interest rate has peaked in our view. Next slide, please. Thanks. Okay, so with that, with this, the market has seen a decline in 10-year US Treasury yields, and the US dollar has also weakened. This is a reprieve for the ASEAN markets. All the 4 countries, Philippines, Thailand, Indonesia, all the central banks have now been able to hold the rates. They have less urgency to raise rates to address their currency decline. The weaker US dollar also helps those companies with US debt, and potential slowdown also means that commodity input prices will be would ease, and that lift some margin pressure. For the in Singapore, the domestic demand has been driving the economic performance, but we think that going forward into first quarter 24, after we finish with all the purchases we need to rush ahead of the 1 percentage point GST increase on 1st of January, we will probably will slow down for retail sales. Then there's other cost increases for the corporates, such as the quota cuts for foreign workers, property tax, that will still continue to keep inflation elevated. The 2 sectors we think will outperform in 2024 still remains REITs and tech. And just to continue on what John mentioned last week, we still think China could offer some opportunities because of the very light investors positioning in Chinese stocks. And for the third quarter results that we've seen from China, they actually able to post a growth compared to second quarter. And the main drivers are the internet players, and even the auto players, EV are saying that deliveries for fourth quarter is still likely to be strong. The 2 sectors that in China that will be weak will be the banks, and also the renewables. People who are in producing the solar panels or in the components for renewables. So we think that China is probably a country that we can watch for some potential gain in the stock price. So for this week, we have Singapore November PMI, which just came out. We just seen a glimpse of it. The October retail sales will also be released. Then in China, there will be a slew of data coming up that we'll track closely to see if our things are really improving for them. And then in US, we have the trade data as well as the labor market report later part of the week. So we have corporate insights for this week and next week. Please join us and sign up and join us for them. To listen directly to the corporates. That's all from me for today. Maybe we can move on to the Q&A. Thanks.
Thanks, Peggy. Let me take some questions. Darren, CityDev, your slide shows no negative. So what caused its share price to slide, and what catalyst must there be? Must be there to cause its price reversal? Does it still drag down by its China exposure? Yeah. So for my operational updates, it just covers the purely the operational update. So it's not so basically when I say no negative, it just means that the operational updates that they came up with, it doesn't show any negatives for in my view. But overall, there are definitely some negatives, such as the weak property market in Singapore, where after the cooling measures is we think the return of overseas buyers, especially for all these high-end projects such as like Newport residentials, probably when they release it in the first half, it might not be as strong as we want because of the 60% ABSD. Yeah, so that is still a factor for CityDev. And if you mean is it still dragged down by China? Yeah, so China, if you mean Sincere investment, yeah, for Sincere is no longer in the books. They have already fully impaired and they have already divested their full stake. So Sincere is not inside anymore. But for the other China, their investment properties in China, in Shanghai it is a little weak because of the weak environment there. Sorry, excuse me. Yeah, so the office market in Shanghai is very sluggish. So they have a 5-tower office building in Shanghai. It is 51% leased. So that is still weak. Alright, it was 51 and it increased to 54%. So that is a laggard. And the office tower in Suzhou is 95% occupied, while the mall is 84% occupied. So the investment performance in China is still weak and not strong, but it's just a small component of their total revenue. Yeah, so for CityDev and other property counters, they are still affected by, I guess, the cooling measures, and which is why the sentiment is still so weak there. We need to see like maybe the foreigners start to come back before there's any solid or catalyst or any sharp catalyst for the property developers in my view. Yeah, I hope that answers the question. Yeah, so for the no negatives, it's basically just based on the operational updates that they've highlighted. Because during the operational updates, very minimal data was given. Yeah. So another catalyst I'll think of is probably the interest rate as well. Yeah. So if interest rates go down, then that will definitely help the property market as the loans start to be cheaper, and investors or buyers will just start to look into more properties and we start to purchase more properties. Yeah. Yeah, next one is what is the sponsor's high interest rate impact to Manulife's overall borrowing cost, as this 137 million is just 15% of the debt. So yeah, you're right. The impact is not very big because first of all, this 137 million is just a small percentage of their total debt, and on top of that, they'll be using the first part, the 285 million of the revitalization plan or recapitalization plan. They're using it to pay off the higher interest debt or of the floating portion. So if you look at it now, the floating portion of this debt is already upwards of 7%. So if you compare this 7% versus this effective interest rate of about 10%, yeah, it's you're just paying slightly higher. So overall, we expect that because right now the weighted average interest rate of Manulife US REIT is at about 4.4%, and their fixed rate loans is at about 69%. So after this sponsor loan, we think that the effective interest rate will probably creep up to about 4.5%. Yeah, so it's not very significant, and it doesn't really it won't really increase the overall effective borrowing cost of the overall Manulife US REIT by a very significant amount. Yeah. Yeah, the next one is given Manulife had halted distributions till December 2025, that is 2 years wait for dividend payout, what would be your recommendation to retail investors with the recent announcement for asset disposition and sponsor? Yeah, so like I mentioned during the presentation, yeah. So first of all, if you are a retail holder, I would suggest that you vote in favor so that at least Manulife can have the runway, or rather 2 years runway for them to proceed with this recapitalization plan and to bring their gearing levels lower. On the other side, if you do not approve, or rather if this resolution, any one of the 3 resolutions doesn't go through, then Manulife probably will have to be in a kind of default position where the lenders can start calling back their loans that are expired, because because if you approve, only if the approval goes through, then the waiver of all these loan covenants, the breach will be in place. But if you do not, if it does not go through, then it will still be in the breach. The financial covenants will still be in the breach, and the lenders will probably call back their loans, and as a result, Manulife US REIT might have to liquidate their assets to pay off these loans. So yeah, so first of all, I'll recommend that investors should vote yes. And right now, if you are holding Manulife, because of there's no distribution or dividends until for 2 years, rather, until 2025, you are in it for more of the capital appreciation, and that perhaps the US office might recover, and Manulife US REIT will be able to carry on with their distribution, or rather their disposition mandate well. So if you are of the view that they'll be able to proceed with that and perform well under like manage to sell off the tranche one assets and such, and then bring their gearing levels down, then we would expect I would think a quite significant share price recovery. But that is of course a high risk thing, a high risk investment if you are in it. So if you are a low risk and your risk tolerance is not very high, so I would recommend you do not hold Manulife. But if you are high risk and you're in it perhaps for some capital gains, and rather yes, we expect if they can proceed well with this recapitalization plan, then yeah, you can invest in Manulife for perhaps the capital gain. But that is a higher risk reward kind of investment. It's not for the dividend play for sure. Yeah, so I hope that kind of answers that. There's a question on, is it a good time to get into European real estate? I'm not really sure what you're referring to, but if you're referring to REITs, we think European real estate as well as the overseas REITs, they have already corrected quite a bit, their share price correction, and they are now trading way below their book value and their historical average book values as well. So one example would be Elite. We have a buy call on Elite, our house view, and that's because they are trading at rather steep discount to valuations. I can't recall the top of my head what the price to book is, but if I'm not wrong, I think it's 0.5 versus the S-REIT index about 0.8 plus now, which is also trading below its historical averages. Yeah, so if you're referring to REITs, I think yeah, it might be a good time to start looking at European REITs as well. Uh, okay, I think there's one more question for now. Hi, any financial modeling in the resolution is passed for the next 3 years? Don't you wish to hold for another 3 years? Yeah, so for Manulife, we do not cover Manulife, so yeah, we do not have the numbers there, and there are too many moving parts. So in the next 3 years, so they have, first of all, after they pay off, they have this disposition mandate, where if they dispose their tranche one assets and after taking into consideration the sale of the park tower and the sponsor loan, yeah, their gearing will drop to 49.4%. So that is not low enough. And after that, Manulife might even come out to do a further equity fundraising, and that could perhaps bring their gearing levels to below 45% and more healthy and more comfortable levels for investors. Yeah, so this is many steps involved. So we'll take it step by step for Manulife. So first of all is approval, and then they'll pay off the 285 million, and then after that, going forward, they'll start with the disposition mandate. So that's the next step. And then after this disposition mandate, if they can get it done and bring their gearing levels to slightly under 50%, then they might proceed with an EFR to bring it down further. Because right now, if they do an equity fundraising, it's also quite hard to get a quantum as well, because we do not know how much, or rather the amount that they actually need after all this, after the recapitalization plan. Yeah, so it's quite hard to forecast for the next 3 years. Yeah, so I hope that answers the question. Yeah, I think that's all for me. I'll hand over to the rest of my colleagues for now. Thank you so much.
Thanks, Darren. I'll take over from you. Thanks. The first question for me, why has ST Engineering share price retreated recently? Okay, if you recall, the ST Engineering is involved in this congestion route pricing system in the US. After they acquire the big acquisition that they made in late 2022. So this there's been quite a lot of noise in US lately about this congestion route pricing. The report that has been done by the Traffic Mobility Review Board has been put up for recommendation. It recommends a tolling structure, and then the MTA board will review it and make a recommendation by December 6th. It means 2 days from now. So this congestion route pricing has faced pushbacks by some senators in the US, including New Jersey, complaining that it will means the truck drivers will not will be penalized by these new measures. Actually, to be fair, this route pricing policy is like almost all in almost every part of the world. In Singapore, we're so used to it. We just get so ever ready to pay. Yeah. So in US, they have never been able to implement it for many years. So this is the first time they will get if they get through, they will get it through. So the market's probably worried that if there's any objections that might affect the ST Engineering's contracts for this congestion route pricing project. But we clarified with ST Engineering at their third quarter briefing. Actually, it will not affect their. That means they have already gone ahead with the planning and the construction. So whatever outcome of this from this December 6th recommendation will not affect their contract. They will still get paid as per the milestones that they have achieved. So we think this is the probably the main reason why the share price has been weakened weaker lately probably due to this pushbacks. Thank you. Next question is there any update on Vertex spec? Please, thanks. It does. After the shareholders meeting last week, so and the redemption exercise, about 62% of the shareholders have chose to redeem. So for this week, it will probably be a very quiet week because those who have chosen to redeem just be waiting for the money to come back by the 7th, which is Thursday. Then Vertex will begin to list as a new entity, 17 Live, from Friday, this Friday. So there's probably very, very little activities for Vertex specs for the rest of this week. But next week will be interesting to watch because the general research out there, including our house, is that it's not exactly the best acquisitions to make, and we think if they further earn out, shares will be issued in next 12 months. The share price should be lower than the redemption price of $5. So yeah, that's all that we have so far for Vertex. Is there a good reason why investors should be paying attention to Zixin? The broad picture makes sense. Then the food supply, food security, it just falls in nicely with the China's policy. And there are two initiatives in Hainan and Henan could possibly make them a much bigger entity compared to now. The only possible thing that investors may have to prepare for is that to grow it to a bigger size, they will probably need more resources, more capital, and these 2 years, this coming 1 year, 1.5 years we see probably a bigger outflow of these resources to secure that sweet potato supply that they need, which is that 15-year contract. You pay 5 years in advance. That one that I mentioned just now. Yeah. So because of this it doesn't because of this model, it doesn't it's very unlike what we usually familiar with, because paying 5 years in advance sounds a bit long in my view. Yeah, we need very, very strong macro data to support an investment in Zixin. Just on their own, they will need bigger resources. So either you see them partnering with bigger players, otherwise is on their own. It's probably very difficult for them to grow to scale. Yeah, that's my view. Thank you. Peggy, what is your current target price of SIA and your reason for that target price? Thanks. My target price is $5.45. This is a 1x price to book for SIA. Why paying 1x price to book? Because I think the sector dynamics has gone into X growth. The rates, the yields, that means the ticket price that we're paying is likely to soften from here. There's a bit of we're getting a bit lethargic maybe not the word. We're getting a bit tired of paying this kind of high price to fly, and also with the possible slowdown in FY24 in the US and in other developed markets, we think the demand for air travel will also be for leisure air travel will slow down. At the same time, we haven't seen corporate air travel pick up as strong to the level that we've seen pre-COVID. Most of this current demand has actually come from leisure travel, and most of the volume came for SIA is also from Scoot. So we think this is the most this is the most discretionary part of the travel, which could fall off much faster than if the consumption spending will weaken. And also, SIA plans to redeem their MCB and another 50% of the remaining MCB, so that will bring down their NAV. And on the cargo side, there's not actually pick up as yet. So therefore, we think that we just pay a price to book for FY24, March 24's book value, which is $5.45. Thank you. Okay. Hi, for Vertex, what will be the next few months development look like? Okay. As I mentioned just now, this week will be quiet because those who ask to redeem will get the money back, and then we wait for Fridays for the new the company to be listed as a 17 Life. We think next few months will be quite interesting to watch because the earn-out shares for Vertex will be given up in the next I think 12 months. So you'll see a dilution in the book value as well as the in the NAV. So we really need to see an improvement in the EBITDA and as well as the active users to justify the valuation that that it has command at the merger. So interesting to watch. But our view is not so we are not so optimistic. Thank you. Again, for Keppel Corp, the impact of the acquisition seems to be small in EPS and NAV. Looks like 24 billion FUM is more important to KC's this decision. Why? Where will the 1.2 billion goodwill go to? What's the impact to financials? Does this property focused fund acquisition make KC now look even more property fund play instead of a multi-industrial assets? I think the traction of this acquisition is really in the investor space. The investors mix is very strong in the sovereign wealth as well as pension funds. I think this is the sectors that Keppel likes to build its foundation in. And in these investors could also potentially channel them into their other funds that Keppel already own currently under their Keppel Capital. So probably not so much of the 24 billion, but more because of the investors that M1 Capital has. Of course, buying over another fund and to add on to AUM is the easiest way to achieve the target. But I think it's probably not the most important part of this decision. The 1.2 billion, the price that they pay, they actually buy the stakes from the existing owners of the asset management company. So the value, the process goes to the owners. The 1.2 billion is just an accounting treatment. It just goes get into the balance sheet, but we're not sure how whether they need to amortize this all have to go through a test of value for that the auditors have to make at the end of the year to test whether the value is still intact. So yeah, it will be in the balance sheet if it's not amortized. Financial wise is it's just that the gearing goes up, the very small impact on the net profit. It probably will still not change it into become a property fund play because as a whole Keppel's asset base is more like it's much larger than this. So Keppel's still have, like, for instance, they have a REIT asset that still have a 4.5 billion worth of REIT assets in their books, which we think they can monetize. They also could potentially monetize their M1. So there are still a lot other industrial assets in this portfolio, including the undersea cables. So it doesn't exactly change that so much as yet. Yeah. Thanks. And to also to remember, they only buy 50% of this asset manager. Thank you. Philip team. Okay, US market has been on uptrend while STI is in opposite direction. What do you think when there will be turnaround, or what catalyst would trigger that? Okay, the STI, the good and bad thing about STI is that it's really a lot of banks in there. So banks is it's really a pegged to the macro environment, pegged to interest rate trend. So therefore, STI behaves in that way when US is probably going to, the interest rate is peaking and we're expecting cuts next year. So that's not unexpected, but we think that overall with this decline, with this peaking interest rates, it actually benefit all markets. So we're also turning positive on the all Asian markets, including STI. Okay. Any update on yen lot results, target price, and when dividend resume? Apologies, we don't cover yen lot because it's really a sector on its own, China property sector. So we've got to spend a lot of resources on just one stock. But I did mention we did follow their contractual pre-sales numbers, which saw a very rebound in the October numbers month-on-month rebound compared to September. So the thing to think about property sector, and also one thing to note is we are all watching Evergrande's today's court appearance on what's the decision on how they're going to resolve their and stay alive and not be liquidated. So today is probably what's come out from that will be quite important for the entire sector. And really who is controlling the Chinese property sector now are the rating agencies and the banks. So Moody's is just downgraded yen lot. So that means that no chance for them to borrow any more money ever. And they're not priority right now will be just to redeem, pay off the bonds that they're due early next year. So it's probably a better bet to buy that instead of yen lot shares itself, because you get a better, higher returns from that. You know that yen lot is very determined to pay that off, because if they fail on one, there's the rest, that's the end, all the other debts in the books will be affected. So we think this year there probably FY23 is still probably no more dividend until yen lot gets his redemption done for the outstanding bonds for early next year. Thank you. The next question: does Zixin Financials involved in shadow banking back in China? Shadow banking is a very broad terms here. So technically, the answer should be a yes, because they actually lending to corporates that, especially property companies who cannot borrow from anywhere else. So you call that shadow banking, then is yes. The answer is yes. Yeah. So I hope I answered that question. Let's see whether I have any more. RHN, any view on its outlook for 2024? Okay, we are attending an RHN. I'm attending an RHN meeting tomorrow morning, so I probably can give a better answer for that. Hopefully I can drop a note in P3 because at the moment the numbers looks a bit because continued operations, the earnings from continued operations is essentially down to only 18 million. So I'm not sure how they're going to address the growth going ahead. So sorry, I don't have a good answer right now. I'll put something on the P3 platform after the meeting tomorrow morning. Thank you. Sorry, Darren, could I pass back to you for the elite question? I saw out the rest.
Sure.
Thanks.
Sure, I'll take the lead question. So talking about European assets, like Cromwell and Elite, do we have to be careful of valuation drops at the end? Yeah, so because of the interest rates, we are expecting some expansion in cap rate. So that would, of course, have a valuation impact on Elite. So for our Elite, Meow Meow is a analyst who covers Elite. In her estimate, she did take into consideration, or rather take into account, a slightly under 10% decline in valuations, and that would not bring Elite's gearing above the 50% threshold if you take into account the about 9% decline valuations. So yeah, that's for Elite. Yeah, for Cromwell, we do not cover, but we do expect logistics assets because of their resilience and the third party logistics and the supply chain resilience. We expect that the valuations might be able to hold relatively stable as compared to the office, where we are expecting a bigger decline there for UK office, for European office, as compared to the European logistics and industrial assets. Yeah, so I hope that answers the question. I'll try to answer some as well. There's one on why this tourism related counters not moving, Genting Sing Escort Cedar Hospitality Trust. Yeah, so we do not expect this to move really sharp or really fast, because after all, this recovery in tourism is a gradual thing, and it's a slow thing that will trickle into the revenue slowly. It's not like a sudden spike in growth. So yeah, we also expect a slower recovery, rather a rather gradual recovery rather than a sharp one. So yeah, I guess that's why also we do not see a sharp recovery in these shares. Okay, I think it's 12:30, and there's one more. Any upside on Keppel REIT? Is it a group dividend stock? Yeah, so at the current share price, Keppel REIT is paying about 5.5% dividend. But our house view on office sector is for Singapore office is that rents are likely to have peaked or have plateaued. So we expect the rents, because currently for the past 3 quarters it's been improving, or rather rents has been increasing by 5 cents. So it was 11.70, then improved 11.75, then 11.80, 11.85 now. So since now it's at 11.5, we think that, and plus a new supply upcoming of over 1 million square foot in IOI Central Boulevard and the Keppel South Keppel, I can't recall what's the Keppel South Central, 600,000 square foot. So IOI Central Boulevard and the Keppel South Central. So these two properties will have a lot of supply in office incoming next year. So that will be kind of a headwind to rents, and will cause pressure on rents, because it's 1.6K altogether. 1.6 million square foot of supply incoming next year. So that will really pressure the office rents going forward. So we think office rents will start to dip into 2024. And our house view is that it has peaked already at 1185 this quarter. So yeah, going forward, if rents go down, we are not too positive on the office, Singapore office, and yeah, we are neutral on it, but we do not cover Keppel REIT specifically. So yeah, is it a good dividend stock? Right now it's paying 5.5%, but they're also paying a lot of past divestment gains, like as form of their anniversary distribution to help to mitigate the impact of higher interest rates. So yeah, you have to take that into consideration when investing Keppel as well. So the amount of dividend you get is not fully from the cash flow from operations. Yeah, I think that's all for me. But it's 12:30. I think maybe we can move on to technicals with Zane now. Zane, you ready?
Yeah, thanks there.
Yeah, thanks.
I'll share my screen for the TA. Yeah, so I think first up will be on iFast. So I think currently we've seen last week price continue to move higher over here, but I think there could be some slowing down in terms of momentum. We see price pushing higher, but there's some bearish divergence in terms of the momentum indicators. So momentum is kind of slowing down. So I expect price maybe to just sort of consolidate sideways for a bit currently. But the next key resistance for iPass will be around 870 over there. Okay, then next one will be on Citrium. Okay, I think for Citrium, last week there was a breakdown below this 0.107 support level. So currently, I think price would still continue to move downwards, given the bearish momentum currently. So the next support level will likely be around 0.101, 0.099, these two levels. Yeah, so also this is also confirming the trend line supports as well. So yeah, I would think that for now, price might continue to go downwards to test this support zone. Okay, then next up will be Silver Lake Axis. Okay, for Silver Lake, I think currently it's just in a bit of a range over here. So yeah, the key resistance is still around the 29 cents level, but support will just slowly forming higher lows along the way. So I would think that maybe price will just consolidate over here for still. I don't think there's very huge volatile price movements coming. Yeah, so I think support is still around 26.5 to 27 cents over there. Okay, then next up, TA on STI. The STI, I think we're still trading inside this descending wedge pattern over here, but should there be a break above this level around 3110 above that, then we might see some sort of recovery in terms of STI to try and go towards 3145 level next. Yeah, but if not, I think we're likely to just see a bit of a muted trading still for STI. Next up will be city developments. Okay, I think nothing too much now. Still a bit of range trading going on still. So I expect that to still continue now. Yeah. Okay, then next up will be Franken. Okay, Franken, I think in terms of the price action wise, showing some continued strength recently. So after the results update, then price actually overcame this resistance 114 over here. Then afterwards we also broke out this 119 resistance. So with that, I think the price could continue to trade higher to try and hit like 126 next possibly. With that being the next swing high resistance. also confirm with this trend line resistance as well, given the current momentum we have on Franklin. Okay, then next up, Keppel Corp. Yeah, so Keppel Corp, after a consolidation over here, broke out over here. Then currently price is hitting 695 today. So yeah, currently there's a bullish breakout outside of this downtrend channel. So near term wise, I would expect some resistance around the $7 mark. Then we might see a bit of a sideways consolidation first. QB03 has been rising. Is it a time activity? So that is venture. Venture currently looks like trying to break out this downtrend channel over here. So I think if it managed to hold this $13 mark, then that might be good to accumulate if you are interested. If it managed to continue on its current momentum. But at this level, I think I'll wait to see. There's some resistance previously over here. There might be some back tests to see whether this breakout holds. Then over there, then we can see the strength of venture. Okay, what's my thought on Barrick Gold? Okay, for Barrick Gold, I think currently this looks like an inverse here and shoulders breakout over here above the 1670, 1680 level. Currently, we are testing the next resistance around 70. But I think for Barrick Gold still looks bullish. I think price could still continue to trade higher towards 1830, 1840, those level in the near term. Given the strong momentum currently in the counter. Can you provide TAA on prime US REIT? Do you see more upside from last week's drop? Okay, I think this counter is quite volatile. Last week we actually had a drop towards near the support around 0.122 over here. I think we are doing a rebound. So, but I think do I see more upside? Looking at the short-term moving averages wise, I think there could be still some upside, but likely to have some resistance around the 16 cents area. Yeah, 16 cents to 16.3. Yeah, given that currently with this drop, that this likely to be just like a short-term bounce, then we might see another pullback again. Okay, then next up will be on Genting. Okay, Genting, I think currently is like trying to form a support base. We have support around the 90.5 cents level, and price I think just a bit of a consolidation for now. So currently there's some resistance on 92.5 cents or 193.5 cents level. I would think that price will just sideways for a while still. Okay, then next up will be on UMS. For UMS, I think currently supported along this trend support line. Price action wise, looks like a bit of a consolidation taking place for now. So I would think that it's still likely to just remain in a bit of a range for now. If you manage to go above the 129 level, then we might see another test of the highs around here at 132, 133. And then next up will be on AEM. Okay, AEM, I think, after the pullback from the retest of this rising wedge breakdown, price just a bit of a sideways over here. So, yeah, maybe for now, there could be just some sideways price action for AEM. But overall, in the longer term chart wise, I think it's still looking a bit more bearish, given that we have like lower highs, lower lows over here and a bearish pattern breakdown. So will be on Semiconductor Industries. Okay, Semiconductor Industry, I think currently is a bit of a looks like a bit of a range building up over here. So there's still some resistance slightly from this 520s level, this volume surge and pullback. So yeah, could be a bit of a consolidation over here first before we see whether it could break out this 525 resistance to go upwards. Okay, the next up will be on UOL. Okay, UOL, I think it's still looking a bit weak for now with the breakdown of 610 recently. Then we actually tested swing low around 558. Its currently price is sideways for now, so I think there might be some sideways price action still, but I think overall it still looks a bit weak. Look at the longer term trend for now. If the recent lows can't hold, then we might see another leg downwards possibility. And then for DFI, okay, DFI currently looks like a retest of trying to retest this broken down support around 230s. So there might be a bit of resistance coming in. Yeah, but so might have a bit of a consolidation move. Yeah, a bit of sideways between maybe like 225, about 235 around. Okay, then for Keppel DC, I think currently price is slowly trending upwards in this uptrend channel. So yeah, we are near, looks like we are near the recent swing high 195 again. But if it can clear, then might go close to $2 as the next resistance. Okay, next up would be Escort. Okay, for CapitaLand Escort, I think it's still well supported along this uptrend support line, and price has just been sideways around this recently, trying to test the resistance and 5 cents again. I would think that it will try to break slightly, the price will try to break out this 95 cents level, try to hit towards the next resistance around 97.5 cents as well as $1. So I think it still looks good over here, given that price has been just forming higher lows along the way. But I think let's see how it goes, whether it can gather some momentum upwards in the near term. Okay, then on the 3 local bank things. Okay, for DPS, I think bit of a sideways currently. So it looks like currently price could just see like some consolidation first. Okay, then next up would be on UOB. Yeah, UOB also like some sideways action currently. So price still holding around the 27.10 cents level with that. If you can hold above this level, then there might be some bounce towards like 27.70. Yeah, you can hold this downtrend resistance over here. And as for OCBC, also around 1260 support, then we are seeing a bit of a bounce. So if you can continue to hold the bounce, might see towards 1280s, 1290 for OCBs. Okay, then some Hong Kong counters. First one is Tencent. Okay, for Tencent, yeah, it's just still bit of a consolidation taking place between 315 to about 330 over there. So I think likely to still see this range trade for a bit while. And then for next one, Ping An Insurance, price is still trending downwards in this downtrend channel, but we are near some supports around the $35 mark. So over here we have the channel support as well as a previous horizontal level as well. So I would think that price might find some support in the short term over here. Okay, then for Alibaba, yeah, it's quite it's testing this trend line support over here around like $71. I would think that near term 69 to 71, this area should be able to hold price for now. We have this another trend line as well. So this is likely the support area the near term. Okay, then next up, BYD. Yeah, okay, BYD I think is still quite a strong bearish momentum over here. Broke down two support levels quite a short period of time, which is 230 as well as this 217, 218 level. So yeah, still looking a bit bearish for now. We might test the 200 level next for BYD if it continues this pullback. And then for Samudra Shipping, okay, it's still looking, we have lower highs, going to the same support level around 59.5 cents. So I think we need to see the price hold at this level. Not if there's a breakdown, then the price might go lower towards the next support level, which is closer to about 56 cents possibly. The next one is Hong Leong Finance. I think nothing much. It's just very range all the way. Has been going on since the second half of this year. Yeah, so likely this is likely to continue for still going ahead. Around 245 to about 250 is the current range. Okay, then some US counters like Broadcom. Yeah, Broadcom currently we've seen some pullback doing a retest of this breakout. So around 910 over here, I would think that likely to hold this for maybe a bounce, but there might be some short-term resistance at 950 for now. Given that this is this where price broke down over here. Okay, then for Google, price pullback currently below this 134 level over here, this support level as well. So yeah, currently we're at the next support level, currently at 131. So we need to see price hold at this level. If not, there might be some continued pullback, I think towards 128 to 29. Okay, the next one, Amazon. Okay, Amazon, I think it's just still a bit of a consolidation going on still. Yeah. Positive is that we are seeing higher lows continue to form. So yeah, we might still see a bit of a sideways action going forward for now. A17U Ascenders REIT. Okay, Ascenders, I think is still testing the strong resistance again at around 285. So likely we might see it hold this resistance again. Yeah, so we might see the resistance hold again. So currently there might be some sideways price action between like 280 to 285 for now. Okay, the next one, DCRU Digital Core REIT. With Digital Core REIT, I think possibly shaping upwards in a rising wedge over here. So yeah, price is just tightening up over here. There might be some resistance around the 62 cents mark. Yeah, so I think for now we might see like a bit of lower volatility for now. Looks like price is just trading in this wedge over here. Next, CGM Best World. Okay, Best World, I think currently it's just nothing too much. Is continue to range trade. Resistance is about 175 to 180. Yeah, and support is about 163 over there. So I think that will probably still continue given that we have seen this range hold since August. Okay, next up, CityDev. Okay, CityDev, yeah, recently we have a break below this 52 cents support and currently to be testing this trend line over here again. So I think this needs to hold. Then price might just do a bit of a sideways, but if it doesn't, then I think we likely to see a bit of a lower levels. So we look at previously, if we go below that, the next support level could be like the COVID lows, which is around 45 cents to about 46 cents, those levels, yeah. So we might do a retest of that levels if we can't hold this support over here. Then next one, capital investment. I think yeah, still a bit of a still very range going on. Yeah, so I think for now that might still continue on for in the near term between this 304 to about 314 range. The next one, Salesforce REIT. Okay, Salesforce looks like after the break of this downtrend resistance line over here, price just a bit of a consolidation still. Yeah, so it looks like currently the consolidation might still continue for a while. But if it breaks to upwards, it will likely test the next level around the 71.5 cents level. And next one, Keppel Pacific Oak. Okay, Keppel Pacific Oak. So that we had a pullback towards the support area over here, 26 cents, 27 cents area. Then currently we are seeing a bit of a rebound take place. Yeah, so I think this we might see this rebound continue up to try and test like 29 cents and above. Yeah. See whether we can try to hit this resistance again. My next one, Maple Tree Industrial Trust. Okay, currently we are doing at a resistance gain of about 231 over here. So it might still hold the resistance, but if it continues to go upwards, then the next resistance to look out for will be around 235, 236. Yeah. Where there's also this downtrend resistance line coming in. As well as the previous range support, horizontal support level. The next one, Maple Tree Logistics Trust. I think for this counter, looks like it's also like similar to DG Core as mentioned just now, a bit just contracting up in range over here possibly. So yeah, currently we are at the 162 resistance again, but we're expecting that near term wise 164, 165 here, there should be also resistance from this downtrend resistance line coming. So I would expect price to just move in a very narrow range near term over here. Okay, the next one, CapitaLand China Trust. Yeah, for this looks like price is just a bit of a consolidation. I would think that will continue for a while. 85 cents level, there is some resistance from the horizontal level as well as this downtrend resistance line over here. So I expect price to just go in a bit of a sideways pattern for now. Then Parkway Life REIT. Now Parkway Life still respecting this downtrend resistance line still. So but the support is around 340, 343 for now. So yeah, we might see price just pull back from here, then maybe just sideways a bit over here. Okay, next one, Marco Polo Marine. I think currently it's doing another test of this main uptrend channel. So I zoom out over here. This has been last year. This is a key uptrend support line over here. So it's doing another test. So it likely to hold this level over here. And if it holds, then we might see another rebound upwards coming. But it's just likely to just consolidate this potential ascending triangle still. Okay, Fraser Centerpoint Trust. Yeah, Fraser Centerpoint Trust it's just a bit of a consolidation at the resistance area of about 222. Yeah, so that could still continue. There's also resistance around 224 next. also. Okay, as for Fraser's Logistics and Commercial Trust, yeah, a bit of a sideways action price. Just a bit of a consolidation going on still over here. So there's some reason at 111. If you go upwards, then the next recent level around 114. Around there. Okay, I'll take the last two questions. Seems it's about 1 o'clock. Okay, you're on Unity as well as TSM. Okay, Unity for now, I think that it's more potentially bullish. So after we had this gap down recovery at the support, price has been trending upwards, consolidation, higher low form. Then we had a higher high over here as well. So we are retesting the next resistance level around 33.40 over here. So there's a this trend line resistance as well. So there might be some resistance over here. I expect a bit of a pullback. Overall, the trend currently is building a short-term uptrend over here. Then as for TSM, okay, then as for TSM, I think currently it still looks okay as well. So ever since the break above this 94 as well as $96, is still holding well above this key support over here for now 96. It's doing a bit of a sideways. So currently there might still be a range consolidation still with the resistance around 100 to 101. This is for TSM. Okay, I think that's all from me for TA. I'll have time to my colleagues if there are any more questions to answer in the chat. Thanks.
Thanks, Zane. I think just answer the two questions, the last two questions. First, this is the comment on TiBev, the performance. What's wrong with the company? Okay, if we study what Zane has done for the three SDRs for the Thai companies, you find that CPO has been very weak, and this is very representative of the condition in Thailand. The consumer sentiment is very low right now. The economy is driven by two factors. One is tourism, which roughly, if you include all the hotels and all the tourist spendings, it could go up to as much as 20% of the GDP before COVID. So the tourism has not come back as strong. And then the other factors is the commodity prices. The farmers are not getting good prices for their crops, especially for crops like rice and so on. So even though the India has banned exports of rice, could have helped, but still we saw a dip the middle of this 2023 in the price of rice. This is just one example. So the consumer sentiment has been weak and the spending power has been low. So the government and plus the very strong US dollar has made fertilizers price very expensive. So going forward, the new premier around launching this incentive to hand out money for people to spend. Of course, there's a territorial limit as to where you can spend the money, but all this we think is actually putting money into people's pocket. That hopefully it will help to drive up the sentiment as well as the consumer spending going forward. And on top of that, the US dollar, the beginning of the US dollar depreciation against the regional currencies here will also help Thailand able to in terms of the cash flow as well as in the margins. So we think for consumer stocks like Thai beverage, there could be a recovery coming back soon if tourism improve as well as local spendings resume. Yeah, so that's all for Thai beverage. The last question here is going forward, is STI being more influenced by China rather than US market? To be fair, actually the Singapore STI is quite a number of stocks that actually have meaningful China exposure. Like for instance, CapitaLand Investments, they have properties in China. Keppel, Semiconductors, they both have China properties. Not to talk about DBS has an arm in Hong Kong, and OC also. All these have some exposure in Hong Kong and China. So our STI is actually had quite a good exposure to China market. Probably not as much for US except for the tech stocks maybe. Yeah. So I think this statement is probably quite correct. Yeah. Thanks. Right. And with that, thank you very much for everyone for joining us today. We look forward to your participation next week. So it will be our last presentation for the year. And then till then, all the best for your investments this week. And we look forward to see you then. Thank you. Bye-bye.